Good morning. Welcome to Trading Hour. It's 11 o'clock on a Wednesday morning and there is an intraday recovery underway. The Nifty had dipped below levels of 22,800 and from that level, it's managed to recover close to about 100 points in the last 30 minutes. The Midcap index is still down close to about 600 points, 1.2% down on the Midcap index. But at the session lows in the morning, the Midcap index was down more than 1,500 points and the small cap index too has managed to recover close to about 2.5%. But there has been savage, brutal across the board selling for the last 6 trading sessions, and that's the picture of how markets have fallen. Individual stocks and the index itself has capitulated from the peak. The small cap index has now entered into the bear market with a fall of more than about 20%. In the large cap space, Power Grid, Asian Paints, Coal India, Hero MotoCorp, Reliance Industries, these are all stocks sitting at fresh 52-week lows. And even on the mid-cap end of trade, you've got stocks like in Ircon, and so many others. I think there's an Alok Industry, a Sri Renuka, MRPL, IOC, NHPC, Z Entertainment, GAIL. These are all stocks which are now at fresh 52-week lows.
Good morning, Nima. Like you mentioned, it's been a brutal sell-off, especially in the last 2 months when you're actually seeing the kind of sell-off. The small cap index, like you mentioned, into the bear territory. But the good news is that in the last 45 minutes of trade, we've actually seen a bit of a bounce, like you just highlighted. And this particular bounce has largely been aided by a bit of buying that's being seen as far as the FMCG as well as the consumer discretionary pack is concerned. So names like HUL, Trent, DMart, these are some of the names that are actually seeing some buying emerge, and that has helped a little bit of recovery as far as the markets are concerned. But we have quite a lot lined up on the show, Rima, today.
I know, and the question is whether this intraday pullback will sustain or not, or the sellers will come back into the picture. But let's welcome on our show in the studio today, Hexaware. Their IPO opens for subscription. The price band has been set at 674 to 708 rupees. It's a pure offer for sale for 8,750 crore. And the selling shareholder is the promoter, the Carlyle Group. We have with us, with the top management, Keech, we call him all, Sri Krishna Ramakarthikeyan, CEO, and Vikash Kumar Jain, the CFO of the company, joining us here in the studio. Thank you very much for joining in. So while walking into the studio in the morning, I was thinking this is not the best of times to, come out with a public, IPO right now. But have you seen investor demand dwindle to some extent when you've done your road shows, especially the retail shareholders, considering the bloodbath that we're seeing on Dalal Street right now? Has that to some extent dented the appetite which would have been there otherwise?
So, good to see you again, Rima. I'll say 3 things. Okay. First, the fundamentals of our business don't change with what happens in a few trading sessions. Okay. Second, I think kind of in a bad market, it takes good companies to feel completely confident about going public. And I think investors should take confidence from that. In a bad market, people may make more money long term than ever. Third, I think most importantly, not only have our fundamentals not changed, I think some of the fundamentals behind the market in India going down are actually tailwinds for us. If you think of one of the most important ones, rupee depreciating and FIIs hence seeing lower returns, actually for us, rupee depreciation is a solid profitability tailwind because our revenues are in rupees and dollars and pounds, and our costs, a lot of them are in rupees. So it's actually a big tailwind for us.
Okay. So the other question is, especially this is a time when quite a lot of your peers are actually calling for a recovery as far as the BFSI space is concerned. You have significant exposure there. So how's the outlook looking for you? What kind of order wins are you seeing? Is it short cycle orders, longer cycle orders? Give us a sense of the order.
Will do. I just want to add one more thing to the prior question, if you could. Right?
Sure.
We have 53 of the largest funds in the world as anchor investors from 96 different lines, 9 out of top 10 mutual funds in India, 3 of the most active sovereign wealth funds, and all the big global FIIs you can think of, Capital, Fidelity, Goldman, JPM, T. Rowe Price are all in our anchor book. Back to your question, Rick. We've already seen a recovery in financial services, especially in the US. And if you think of some of the directions which are very sure of the new administration, lower regulation, certainly not increasing taxes, right? More appetite for M&A and IPOs. all of these are significant tailwinds for the financial services sector. And I think, it's already seen improvement, and I think it'll do even better.
Vikash, let's come in on the margins then. As Keech was pointing out, the rupee depreciation is a big, big tailwind. Now, your 9-month EBITDA margins on an adjusted basis were 17.4%. And in our last conversation, you said these are baseline margins. But since then, since the time we have these numbers reported, we've seen a big rupee depreciation. Would you like to raise your baseline margin estimate going forward purely on account of this tailwind?
I think it's a combination of few things. Number one, last time also we spoke about, I did mention that these are the baseline margins. There are two aspects to it. One, which is completely within the control of the company, which are the operational aspects. So we are working in terms of improving our utilization, offshore mix, how we expand our presence in tier 2 locations, which will bring down the cost of delivery. That should aid margins. And then the operating leverage, which comes with scale and growth. The second aspect is with respect to external factors like exchange rate, foreign currency fluctuations. They definitely aid from a margin perspective. Given the fact that there are certain restrictions in terms of giving me outlook per se, I think after our first quarter results.
So say a 1% average depreciation quarter on quarter, given your hedge position, etc., would benefit your margins to what extent?
Close to 40 bips.
40 bips, all things equal.
Yeah.
So 40 bips improvement in margins for every rupee depreciation.
Yeah, but I would call out this that from a long-term perspective, a lot of those, because there is a pricing, the clients also know about it. So a lot of the players basically come and it averages out, and which is basically in the short term it comes back. Some of it also goes back to the client. The other aspect, what it does is the way to think about it from a long-term perspective is rupee always a dollar appreciates, so rupee basically depreciates. A part of that goes in terms of funding the salary increases. The merit increases are significantly higher than the price increases what we get from the clients. Many else put together. So
one
a
word
part
also,
of that goes.
the margins, especially since we're talking about that. As far as the DRHP is concerned, last year quite a few one-offs were there. Are most of them already priced in? Now going forward, what is the baseline margin? If you could give us.
So as I said, most of them were truly one-timer in nature. One of them, which will continue until say first half of this year, is with respect to a ERP implementation that we are doing.
Okay.
But other than that, everything else was truly one-timers and they are not expected to continue.
So Keech, talking about growth, you've always maintained that your aspiration, and you've proved it in the past, is to continue to grow above industry growth averages. Tell us a little bit more about growth. What shareholders, there are a lot of new investors who've come into the market in the last 3 years and they don't know the Hexaware of prior to 2020. So tell them what they should expect from the company in terms of growth.
Sure. I just want to clarify, it's not just growing higher than industry average. I'll say our history is to grow materially higher, 2, 3 times, sometimes more than 3 times industry average. And I think that is certainly our ambition. Our ambition is to do that relative to industry. Our ambition is also to be in the best, the top in the growth in our sector.
So this year you will be 2x that of the industry, or will it be 3x? And what about FY26 in terms of pure fundamental growth, headwinds and tailwinds as you see it?
Yeah, I think the most important tailwinds are the policies of the US administration, which I spoke about earlier.
Right.
Lesser threat of increasing taxes or no threat of increasing taxes, substantially lower, regulation, just ease of doing business, right? I think that, is already, you've seen it already in a number of types of institutions' results, right? You were asking earlier about financial services. You look at the stock prices of the financial sector in the US. That's a pretty good indicator of where the market is going.
So what are budgets like?
See, I think what customers have got to is not deciding the budget for the year, but do it more on a quarterly basis. I will certainly say right now, nobody's thinking of a lower budget this year than last year.
Earlier, you had highlighted some softness as far as the manufacturing and consumer verticals are concerned. Will that continue into the first half going forward? And what percentage of your total revenue pie is that particular segment? When do you see a recovery there?
16% of our revenue approximately comes from manufacturing and consumer. Right now, the way we see it is there's a softness. I mean, 6 months back, the outlook might change. There could be a spending which is going to come back. A lot depends upon in terms of what the interest rates happen from a global perspective. But right now, in the immediate future, we see that there is going to be a bit of a softness which will continue.
In the interview, you had also spoken about how 60% or 62% of your revenue come from clients who have $5 billion plus in terms of a revenue run rate. What was that number, say, 3 years ago? How have you managed to mine these large clients? And what is the significance? Is it that your revenues are more sticky, or is it because they're large clients and therefore they have more budgets to spend and therefore that aids your growth?
So I think let me start with the significance. It is exactly what he said. The clients have larger budgets. And once we do a good job with them, which we do, then our ability to grow with them consistently over a long period of time is very good. Okay. I don't recall the exact number 3 years ago, but it has gone up.
It's gone up. Okay. And just one quick word then on Carlyle. Right? We've spoken about this in the past, that, you know, it's a PE holder, a PE promoter. They will sell stake in the company. How do you envisage that stake sale to plan out now that you're a public company?
I don't think they have a timetable. The funds have several years of life left. But you're right, they will sell. And I don't see that as something that people should be worried about. Our markets are so large. There's $3.5 billion of net new funds every month. I think that depth of market here is what gave us the confidence that even if Carlyle sells, it's not going to impact any shareholder.
So no planned timetable as far as further paring down of stake of Carlyle is concerned.
That is correct.
If you're done, Sharma?
Yeah.
Thank you so much, gentlemen, for joining us. Wish you all the best for the IPO, and we'll get you, once again, once the company lists onto the exchanges. Thank you.
Thank you very much for coming down to our studio.
Let's now slip into a short break. We'll get you more on the conversation with the Petroleum and Natural Gas Minister Hardeep Singh Puri on the other side. Welcome back to Trading Up. Petroleum and Natural Gas Minister Hardeep Singh Puri says India consumes a significant percentage of the world's total oil, and if we diversify our sources, it will have an impact on prices. Also talks to CNBC-TV18's Manisha Gupta about the use of artificial intelligence by OMCs and the green energy push. Let's listen to that conversation.
There are no sanctions on Russia. Please, I want to clarify that once and for all. There was a price cap.
Right.
Today, Europe, which talks about sanctions, is importing 25% of its requirements on gas from Russia. The energy which comes through a pipeline to Hungary has always been exempt. What is going to Sakhalin is exempt. So where are the sanctions? Today, yes, some additional entities have done. We are very clear. We buy through the floating of tenders at the point of importation. And we will continue to float those tenders. So from 0.2% it went up. Today it's come down. Will it continue? I see this exercise going on all the time. We buy 5 million barrels. When we were buying, there were 800,000 barrels coming in from 5 countries in the Middle East, in the Gulf. Today that will go up and down depending on the price. And I think a large market like India, which consumes a fairly significant percentage of the total oil produced in the world per day, is in a position to diversify its sources and also have an impact on the price.
The other buzzword clearly around IEW this time around has been around AI. So the question really arises is whether it's about AI into energy sector or energy that AI really consumes.
Both. It has to be both. I mean, if you look at the data centers, my God, how much energy will they require? If you look at AI, if you start using AI, I'm already very impressed with the fact that our AI is being used by our oil marketing companies, by the refineries and anyone else. So it's a story which is just beginning. When the Prime Minister organized the entire government of India, I mean government, entire council of ministers, all the secretaries, to be present in Vigyan Bhavan for a presentation of AI several years ago, 5 years ago or something like that? I mean, at that stage, people are not understanding the full. Today, my God, AI, machine learning, the whole fourth industrial revolution. And if you look at the history, I mean, Britain dominated the first industrial revolution through coal. Then along came the Americans on oil, and then the Middle East. Today, This fourth industrial revolution and AI and all the other fields, they are significant drivers.
So, 5 years ago, if you talked about renewals, or 5 to 7 years ago, there was a lot of confusion on we have hydrogen and we're talking about solar and we're talking about ethanol as well. Would you say we've found stability now and there is growth?
No, there are still skeptics. When I talk about green hydrogen being something in the near to medium term, a lot of my own colleagues say, "कहाँ होगा भाई?" मैं बता रहा हूँ, अभी देखो क्या होगा. एक tender float किया, देखो क्या global response आया. If one of my companies, which has 11 refineries, they're trying to use green hydrogen too, let them take it to 4 and 5. Let's see what happens. Look, it's a question of scale. Would you ever have believed in 2014 that we'll do 20% blending by 2025? Nobody would have believed you. So this is the real story about the scale of the revolution taking place. There's continuity, but there's change, and that change is bringing in continuity also.
But would you say these skeptics have turned into healthy skeptics now?
No. A skeptic by definition is a skeptic. So there's whether healthy or unhealthy. He or she enjoys being a skeptic. So let them continue with her skepticism. We'll have a couple of guys like me who are optimists, so we'll balance them.
I also want to talk about ethanol. I mean, that's a question that I asked you, but beyond 20%, what is the preparation?
Well, the discussions have started, and I think very soon we will have some ideas, because this has to be done through the ecosystem and all, the automobile manufacturer. Now we've got an HPCL kit where for 1,000 rupees you can convert a two-wheeler or a three-wheeler to use biofuels. So as we go along, we shall discuss the story with you further. Yeah.
I have one final question, and this is on nuclear, and I do understand your enthusiasm onto that one as well, but are you still waiting for numbers?
But, this is something on which the narrative has started. I mean, in subsequent sessions, I think we should include nuclear also as one of the thematic areas. But for that, some developments need to take place. Some people need to shed their inhibition. We need to revisit the liability laws. We need to do other things. And then it will move. Hopefully this time in much smoother and a more seamless manner than last time.
Well, a very interesting conversation there from Manisha with Hardeep Singh Puri. But moving on, Mitesh Thakur now joins in for a quick technical check on the market. Thank you so much, Mitesh, for joining us. Well, from the last time you saw us, there's been a very steep fall and a bit of a recovery as well. Do you think the Nifty at least has made an intermediate bottom?
Morning. So difficult to say that, because we just had about 100-point kind of a bounce back. But what I did mention earlier in the day was that closer to previous lows, which is 22,800, at least people who are short should exit there and take profits from their short positions and trail your stop losses very tight, because one, it's a previous low from where 1,100 points kind of a bounce took place, and also that we were quite oversold. So typically short covering can happen. Now it looks like some short covering has happened, but have we got a full reversal signal? Not yet. So still waiting on the index. The only advice still remains that if you have shorts, take profits over there.
Mitesh, hi, morning. What about stocks?
So on the stock side, I am now looking at some stocks, which could possibly give some reversal from support levels. So that's the way to trade, identify stocks which have fallen, which are close to their support levels and can possibly bounce back. One of them is BSC. BSC, if you look at the chart time and again, I think, the stock price has bounced back from levels around 5,100, 5,120. It's done that again today. So try to buy it around 5,200. It's moved up slightly bit in the last few minutes. So around 5,200 buy. Keep a stop of 100 points and look for a target of around 5,400. That's the first target. And the other stock which I have is sell on Prestige with a stop at about 1,290 and a target of around 1,200.
Okay, by the way, some more stocks are moving around. Mitesh, thank you for that. Along with BSE, Motilal Oswal is also picked up. It's now back in the green with a gain of about 1.25%. MobiKwik, that fintech is up nearly about 2%. Campus Activewear is up nearly 6-7%. Premier Energies is moving up on pretty large volumes. Jupiter Wagons, which had seen a fall of 55% from its 52-week high, is rebounding from those levels. And another one is RVNL. It's still down in the red, but it's managed to trim some of its losses. We'll get into a break. Before that, here is a small and an important note for all our viewers. India's biggest SME awards are back. Nominations now open for the second season of CNBC-TV18's SME Champion Awards, which will celebrate the champions of India's growth and innovation story. So scan the barcode on your screen to submit your nominations. Slip into a very short break. On the other side, we'll get chatting with the management of BLS International. Welcome back. BLS International Services reported a good set of Q3 numbers. There was a 43% jump in the company's net profits. Top line growth was about 17%. BLS e-Services also reported their numbers yesterday. There was a jump of 65% in the company's top line. But first, let's talk about the visa business, which is the mainstay of the company. Shikhar Agarwal, chairman of BLS International, is now with us on the show. Shikhar, thank you very much for joining in. So let's start with BLS International first. And in that, wanted to understand on the visa services, because your visa revenues have fallen 10% quarter on quarter and are up just 3% on a year-on-year basis, despite December being a seasonally strong quarter. So can you explain that? And what can you guide?
Actually, if you see our December quarter, seasonally, the volumes that we have achieved is lesser. So, for example, you've done around 9 lakh volumes in December quarter compared to last quarter where we did around 10 lakh applications. Year on year, if you see our net revenue has actually increased by 60%. So we did 7 lakh applications last year in December quarter, and this year we've done 9 lakh applications. The net revenue has increased by 60%. And if you see our EBITDA year on year has increased by more than 77%. So we have seen a good growth in the visa business, both from organic and the acquisitions that we did of iData and Citizenship Invest. Those numbers have also started to come in from the third quarter.
Can you explain the volume drop seen on a quarter-on-quarter basis, 9 lakh versus 10 lakh? Is it that we've seen the momentum in travel fade a bit? And what are the early indications of Q4 in terms of the number of applications? Will Q4 volumes be better than Q3 volumes?
See, normally, every year Q3 volumes are a little lesser because there's a winter season in Europe, festive holidays in India and other countries around the world. So normally December and January are lesser volumes, but volumes start coming in from February, March. So definitely, we are seeing volumes coming back, from February onwards, and going forward, quarter one, we see good volumes coming back. So definitely, if you see, we have achieved 30% EBITDA margins compared to 20% last year. And we have seen a major growth in terms of consolidated revenue and profitability of the company. So definitely, we see the momentum continuing.
Shikhar, two questions. First, end of FY25, where will you end in terms of revenue, EBITDA margin and PAT compared to FY24? And second question is, on a sequential basis, while revenues have grown significantly, there has been a significant margin compression as well. What is the reason for that, and can it bounce back in Q4?
Correct. So if you see on a 9-month basis, we have done a 444 crore of EBITDA compared to 255 crores 9-month last year. And that has been a significant jump of 80% in EBITDA. And if you see, margins have grown from 20% last year to 30% this year. Quarter on quarter, there has been a small dip in margins, from 33% to 30%. But going forward, we expect to maintain those margins. The reason being, in BLS e-Services, the company that we acquired, RD Phillips Loan Solutions, that's a high revenue company, but the margins are lesser, around 4 to 5% margins that we do in that RD Phillips Loan Solution, since it's a loan distribution business. So that is why on a consolidated level, if you see, our margins have a little bit come less. But if you see only in visa business, our margins have actually increased. Last quarter, our margins were at 36%, but now it's 37%. So definitely there has been an increase in margin in the visa business.
Okay, yes, there has been a margin increase in the visa business, but it's just in the digital business, e-services, you explained that's on account of the acquisition of Edifidelis, excuse me if I've got the pronunciation right. So in Q3, the contribution of the acquired entity, the margins were 4.4%. How do you expect that to scale up?
See, in BLS e-Services now we are at a 12.9% EBITDA margin level. As we only got 1 month of revenue of that company, that is why probably going forward, our target is to maintain the margins. As this business, you get per application revenue, but compared to what you get abroad is much lesser in India. So margins are lesser in this business, but volume is growing, and profits are growing. So we want to maintain the margins that we have achieved in this business. Obviously, going forward, as more revenue comes from RD Phyllis, there will be a little bit pressure on the margin percentage, but profitability as a whole will definitely grow.
Okay, Shikhar, thank you so much for joining us, giving us a sense of how exactly the quarter panned out, both for Q3, for BLS International as well as BLS e-Services. Well, some very important information on your screen. Remember, the AMFI data as far as the month gone by was concerned was due yesterday. It got delayed to today. And as you can see on the screen, there has been a moderation as far as net equity inflow is concerned. On a month-on-month basis, the large cap fund flow has been higher on a month-on-month basis, but the net equity inflow, that number has moderated. The most important number that the street will look forward to will be the monthly inflow number as far as the SIP is concerned, the systematic income plan. And in that particular number, remember, we've kept a run rate well in excess of 20,000 crore. And whether there is any dip over there on account of market correction is something that the street will be eagerly awaiting and watching out for. That number will come out a little later when AMFI arranges a media conference call. But time now for a short break. We'll get you more on the markets on the other side. Welcome back to Trading Hour. Well, the brief respite that we saw from the selling pressure, we are seeing some more selling has actually emerged after the recovery that we saw. The selling is especially seen across the pharma pack. Have a look at names like Sun Pharma, Cipla, even a name like a Lupin, that came out with its results yesterday. These stocks are seeing selling pressure. But as you can see, the important mutual fund data for the month of January is out. The small cap inflow has actually gone up on a month-on-month basis.
So small cap has gone up, mid cap has gone up, large cap has gone up. So the difference is this time thematic funds have seen a big, there have been lesser inflows into thematic funds compared
also could
to
be explained by the lack of new fund offers.
NFOs had also come down in the month of January, given the volatility that we had seen in the last couple of months. January in particular was a very, very volatile month. We had the budget, we had the US elections. So NFOs were also on the lower side. But that said, the overall inflow at 39,000 plus versus 41,000 plus on a month-on-month basis is still a very strong inflow into the net equity, into the net equity funds. And it just shows that, retail investors have sort of matured and they're able to weather the volatility storm. But we have Mohit Gang, CEO and co-founder at Moneyfront, now joining in. Mohit, morning. Thank you for joining in. Early numbers, but your first take?
Hi, Rima, good morning. Yes, the numbers have just come out and honestly, it surprises me a bit, but I think it also gives me a lot of confidence to see that the flow into the mutual fund categories have not stopped. 39,000 plus crore in equity after a strong month of 41,000 odd crores. It's a massive number by all means, right? And given the kind of volatility which we have seen in the markets for last one and a half odd month, I was hoping that the numbers will ebb a little, but they haven't, which shows the kind of confidence which people have in the Indian financial system, in the equity markets, and which also shows that the long-term investor is now matured enough to withstand such volatility and is willing to put in more money at lower levels if he's confident. So I think all in all, very good numbers which have come out. And the numbers are a bit surprising, but I think that's a positive surprise to take.
So positive surprise from the numbers. Mohit, especially in February now, given the fact that post-January, we have seen quite a bit of a sell-off as far as markets are concerned. What will be the numbers that you will be looking at? Apart from the SIP numbers that we track monthly, where do you think there could be some moderation as far as inflows are concerned?
Look, honestly, I'll be very keen to watch out the SIP number at around 26,000 crores. I'm quite keen to see what is the net SIP inflow, right? So the gross SIP inflow to me is a little irrelevant data because that keeps showing an uptick month on month. But I'm just keen to see what are the kind of SIP closures. And we were last month also at a fairly high number on SIP closures. In fact, at an all-time high number on net on the SIP closures and a very low number on the net SIP figure. So that is one thing which I'm watching out for. Second, I think the sectoral shift is quite evident. I think that is for lack of new NFOs. Sectoral money was all being collected because of new NFOs and which were coming out, and I think that flow has now stopped a little, not completely stopped, but there are lesser new NFOs, so I think that flow will come out. And I want to see the tilt between the large, mid and small as to how the money is getting allocated. That to me is a very key indicator of what the investor at large is thinking. So I think these are few data points which I'm keen to look at.
You know, large cap, there has been a little bit of flight to safety towards the large cap where there is relative value, because I think the large cap inflow number went up from 2 to 3,000 on a month-on-month basis, and that's a sharp near 50% jump that we've seen. Anthony, do stay on, Mohit. Anthony Heredia, Managing Director and CEO at Mahindra Manulife Mutual Fund, is now with us on the show. Thank you very much for joining in. You know, we were just chatting with Mohit, and he's pleasantly surprised by the resilience of the net equity inflows despite the market turbulence. But you know what's happened in the month of February, particularly the last couple of days, the savage, brutal fall has really shaken a lot of retail investors more than the kind of volatility that we had in the month of January. So first, your comments on the numbers, any trends, any thoughts on them, and plus, what do you expect going forward in the month of Feb?
Yeah, hi, thanks, Rima. No, so I think the January numbers, I was expecting to come in broadly at these levels, because even for us, the flows were pretty much similar to December and November. I have to say, however, in the last 15 or 20 days, I would say sentiment has definitely changed a lot more. My view is I don't think the flow pattern will change significantly, but I would believe there will be a larger shift as you see the next few months fold out into flexi cap, multi-cap, multi-asset and hybrid. I think the dominance that you saw in the last 1 year in terms of thematic small and mid cap will give way to flexi, multi and large. That is something that is clearly starting to play out over the months of December and Jan, clearly playing out in Feb as well. And I think that will show up over the next 3 to 6 months.
Actually, any interest you're seeing as far as debt mutual funds too are concerned? You're speaking about multi-cap funds, so that gives the fund manager a lot more flexibility, right?
So debt, to be honest with you, ever since the tax law changes that happened 2.5 years ago, has been a difficult sell, point number one. Point number two, you have to think about it. On one hand, you can't be saying we're at a peak of rates and rates are going to come off. The first thing I would do is lock it into fixed deposit and bank deposit rates then at this point, right, as first port of call. I think the answer for the industry will be hybrid. So I think multi-assets, and I've said this before on your show and multiple other occasions, I think multi-assets, which is a combination of fixed income, gold, and exposure to equity, is probably the best product at this point I can see for the next 6 to 9 months.
Thank you so much, Anthony, as well as Mohit, for joining us, giving us a quick take on the AMFI data numbers that have just come out, and quite encouraging despite the kind of market fall that we are seeing. Let's now take a short break. Up next, we'll discuss market fundamentals with Gurmeet Chadda.
Well, it's a real solid recovery underway, and it's only gathering more momentum on the way up now. The Nifty surpassed 23,000 now. From the day's low, it's been a recovery of 200 points. The day's low today was sub 22,800, and it's been sharp the last few points. The recovery from 22,900 to 23,000, that 100-point recovery has been very sharp on the markets. The Midcap index too is only down about 100 points. At one point of time, it was down 1,500 points, and the gap between the advances and declining stocks have also narrowed. The small cap index recovery will also come up for you on your screen. Life insurance companies are up and away. So the top gainers include an SBI Life and HDFC Life, 2.5–3% higher on these names. You've got an ICICI Pru, LIC also up and about. What we've understood is that in the new income tax bill has maintained a status quo on corporate tax of 12.5% on life insurance companies, and that's staging that intraday recovery in these stocks, because there was some fear that this corporate tax rate the life insurance companies pay of 12.5% could be high. There was no firm expectation, but there was a fear in the market considering it's less than the general corporate tax rate. Gurmeet Chadda, Managing Partner, CIO, Complete Circle, is with us to talk about life insurance and all the other, the intraday recovery and the market sentiment right now. But first, Gurmeet, life insurance and this news?
So if this corporate tax news is correct, and also if you see the AP data which came, which is annualized premium equivalent, wasn't that bad. I think there's one concern of the market that in the new tax regime takes over and becomes the default regime for 90% of the people. The forced saving of incentive due to Section 80C, goes away, and GFM is the best quarter. So what you could see is that these changes will come next year. So and so premiums you collect in 3 quarters and premium you collect in GFM are usually same for the life insurance names. And there were some changes in ULIP, in Section 10D. So my sense is the stocks haven't also done well. And this is the time of the market where sectors which have been completely out of favor and haven't participated at all. Look at HDFC Life. I think the previous high was 770, if I remember, a couple of years back. Or an ICICI or most names, there hasn't been any movement. Same is the case for some beaten down FMCG staple names like HULs of the world, Tata Consumers of the world, and also some chemical stocks. So I think there's a bit of a shift also happening towards relatively sectors with pockets of margin of safety, which haven't really participated, and the stocks are available at very reasonable multiples.
Gurmeet, you've mentioned a few stock names and a few sectors that you like. What is it that you're buying in this steep fall?
I think, Vivek, that a lot of the risk, and we've been in the market now for 20 years, most of the risks are now on the table. So whether it is Trump tariffs, whether it is, some slowdown in earnings. By the way, this, if you see a broader universe, it's not as bad as what it's been made out to be, especially as far as the top 500 Nifty stocks goes, where, 80% of our portfolio is or 90% of our portfolio is. Third, I think a bit of a movement in rupee also created a bit of a flutter. If you see, touched 88, came back to 86.5, right now again going back to 87. So a lot of the hedge funds, because the dollar index did not show much changes, that would have also contributed to a little extra selling. And some, I think, I would say that some, needless comments coming from senior industry veterans. In times like this, you have to be a little more responsible. A little more, it's not that this is the first time market is correcting 15-20%. We've seen this multiple times. Only thing is you have to differentiate what will get impacted. And I think domestic consumption names look good. So we're adding banks. We hardly have a lot of international linkages. Nifty has been a bit of an underperformer. We've added some chemical names where the end usage is, let's say, consumer discretionary. Some names in fluorinations, some names in zinc oxide like JG Chemicals. Some of the other names also we are studying like SRF, because as I said, it offers margin of safety. We are adding some lot of defense names where the correction has been 30, 40, 50%, because the order book momentum is good, and you can see visibility for next 4 or 5 years as far as that is concerned. And we have added some names in IT from a near-term earning growth perspective, both in large and mid-cap IT.
Okay, so mid-cap IT, specialty, some of the chemical companies and defense, that's where you see relative value right now. But Gurmeet, tell us what happened in the last 48 hours, or at least till 10:30 in the morning, because it wasn't just FI selling. Was it that leverage trades got sold and got sold in the market? What exactly transpired that explains this kind of savage across the board selling?
So there have been some margin calls. A lot of people take lines, and when you get those kind of calls, you tend to liquidate your holdings rather than pay for the margin calls. Some of that happened, and I think some comments came which actually also made a point that the entire thing should be sold lock, stock, barrel, and I think some of them are actually out of context. So it's added to the panic, and a lot of stocks were falling on very low volumes yesterday and in the first couple of hours today. That typically signals, in my view, the bottoming, because that's when, when the panic trade happens without looking at valuations. For example, look at some of the names you have in, let's say, auto, for example, right? Some of the stocks are falling, which do not have any global supply linkage. They have fallen despite good earnings. So Uno Minda reported, for example, I'm just giving an example, reported, almost 250 crore PAT. They've been approved in the PLI schemes for LED. The stock went up to 1,070, and in like one session, it was down like 10-15%. Today's obviously it has recovered. So a lot of places, despite good earnings, Solar Industries won a Pinaka order, which was long awaited. 10,000 crore, kind of an order, of which they get 6,000 crores, highest ever PAT at 350 crores. And all they said was the volume growth would be 10 instead of 14, 15, but revenue growth will make up, and the market reacted. So my sense is lot of the time the reaction is more of panic, and that's when at low volumes, because that the fear sentiment is stronger, takes over. But my sense is, as I said, I see a lot of risk on the table until something global really big happens, and I think market valuations are reasonable, unlike a lot of people, and good investors never waste a correction or a crisis.
Thank you so much, Gurmeet, for joining us and giving us what's on your shopping list in this particular market fall. Time now for a short break. We'll get you more on the markets on the other side. Welcome back to Trading Up. Well, a very sharp recovery is what you're seeing. In fact, the Nifty small cap index has briefly gone back into the green territory. So it's been a very, very sharp intraday recovery. What's led to the recovery? Well, some of the stocks yesterday and today that saw very sharp sell-off. A lot of them have come back and seen buying interest at lower levels. Yesterday, remember, the entire hospital space took a very steep knock. Today, they have come back. Have a look at an Apollo Hospitals, that particular stock up almost 2%. Even a large cap capital good name like L&T, that stock too has lent some support as far as the main benchmark indices is concerned, and even L&T has seen a very sharp up move, almost 1.5% higher. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime report is up next.